Hello and welcome. You're watching First Take here on News9, where we bring to you the morning buzz on the last 3 times. So Yash Maheshwari, and with me in the studio as always is Amit Ranjan. And it's a Tuesday morning and the markets, they have opened in the red. Nifty has broken below the 22,000 mark and was trading with a cut of about 0.5% in the morning itself. The broader markets, I mean, although they are positioned slightly better, they are still seeing that incremental selling take place, but nothing to worry about. They're just trading with a cut of about 0.2-0.3% this morning. But the market, of course, remember, it's jittery as it's an event heavy week, and we have finally had a verdict from one of the bigger events that we were waiting for. More on that later. But Amit, I mean, clearly there is caution in the system as far as the markets are concerned. Even in the global arena, I mean, Wall Street in the green, Asian markets in the red. What's going on?
Shifting caution and role reversal on just after one day. Yesterday, Wall Street was in the red. Today, Wall Street is in the green. Tech stocks are back up in the green. Nvidia is up 0.7%. Tesla closed in the positive at 6.26%. Disney is up. General Electric is up. Apple is up. Dow Jones closed in the positive at 0.2%, S&P 500 in the positive at 0.63%, Nasdaq in the positive at 0.82%, Stock 600 although is in the red still at minus 0.17%. Hang Seng is in the negative this morning at 1.11%, and so is Nikkei at 0.15%. So the expectation from the meeting that is on have not really given optimism to the Asian markets.
All right, because the verdict is just out, but something on the US markets. I mean, there was this big expiry that was to take place, so perhaps there was some bit of cutting off short positions over there. That's why we are seeing this sort of a bounce back in trade. But of course, Asian markets are in the red. They were jittery. They were waiting for Bank of Japan to come out with its policy, and it has in fact raised rates in line with what the market was expecting, and this rate hike has been for the very first time in 17 years. And I mean, for those who are not familiar and are curious that why the Japanese central bank is raising rates when everyone else is looking to cut, I mean, the situation over there is completely different. Japan has been in this long battle with deflation for quite a while now. I mean, everyone else, majority of the global economies, they are struggling with inflation, whereas Bank of Japan has been struggling with deflation. So that's why they have gone for this interest rate hike. The situation is slightly better now. That's the word coming from BOJ. But that could have a long-standing impact on our markets, because remember, we had talked about it yesterday. Yen is looked at as a carry currency. So what a lot of these foreign institutional investors and HNIs used to do was they used to borrow from a low interest rate regime like a Japan and invest in high interest rate regimes like India, and benefit from that interest rate differential. But with that rates going higher in Japan, that particular segment of the market could take a hit, and emerging markets including India could see some impact on FII flows. What other implications will be there, we'll just talk about that in a short while from now. But our markets, remember, they have opened in the red, they are struggling, and we are very close to a critical support zone. To get his views on the markets and see if we can stay above this, let's welcome our technical guest, Mr. Brijesh Iyer of IDBI Capital Markets. Thank you for joining us here on News9, Brijesh. Always a pleasure, speaking with you. And I mean, we are around that 21,900 zone on Nifty, and that has been a critical support for the index in that, in the past 4 sessions. And incidentally, that also coincides with your 50-day moving average. I mean, as I mentioned, I mean, we are back in that zone, 21,900 odd mark. What's your view now? I mean, is that a zone where we'll consolidate, because of 22,120 has been a a key hurdle on the upside? So the market has been pretty much consolidating in that 200-point range. What's your view?
Good morning, Suresh. So yeah, so as you rightly said, we are at the 50-day moving average, which is almost close to 21,900 mark. So my concern is more of the weekly chart, because in the previous week there was a sell-off in the market. The market was down by almost 2% on the Nifty index, and the way the candlestick pattern has emerged in the last week is not that strong. It's a bearish pattern, and with the selling volumes. So I'm little bit concerned at this point of time, because I believe if we see a close below 21,900 mark, then a little bit of more correction. Like eventually the last week there was a 450 odd points of correction was there in the last week. So may not be a 450 points, but definitely 200, 250 points kind of a correction from 21,900 level. So that is what my view is for the market. On the way up, 22,200 looks the immediate resistance. There is a lot of call writers who are extremely active at 22,200. So 22,200 is going to act as resistance at least for the next couple of days. And on the way down, if 21,900 is broken, I need a confirmation so that if we see a close, so I believe another 200 to 50 odd points corrections can be there. Charts are looking weak. There's a distribution in the weekly time frame. So I have a cautious view on the market.
All right, cautious view on headliners. I mean, if we break below that crucial support that we just put out there, another 200, 250 point fall could be in the offing. And you know, while we have all been talking about the broader markets, the headliners, they have got all the attention. Nifty Bank, Brijesh, I mean, over the last 7-8 sessions, it has been making lower lows, lower highs on the price charts, which of course is a bearish signal. I mean, so far the index has defended the 40 DMA, which is around that 46,350 mark, if I'm not mistaken. But 46,700, 800 is where, you know, time and again we have hit that brick wall. What's the verdict on Bank Nifty? I mean, can we finally take out 47,000 on the upside by tomorrow's expiry?
To be very frank, Suresh, 47,000, there is a lot of call writing, and the way the Bank Nifty has corrected. One good part for the Bank Nifty is, like, for the last 8 trading session, the Bank Nifty is corrected, and the intraday charts are in the oversold zone. So only because of this, there can be a slight bounce. If you don't break 21,900 and the Bank Nifty sees some bounce, there can be slight intraday bounce is possible, but then 47,500 looks quite. I'm not too comfortable, or maybe right now I don't believe 47,500 might be there. 47 itself looks like a resistance zone for the Bank Nifty at this point of time. Bank Nifty, I believe it will be more of a range bound. Will not break the low. 46,000 may act as a support, but then having said this, 47,000 is likely to act as a very major hurdle. By any chance, even 47,000 is taken out, 47,500 is the next resistance zone. It's more of a sideways trend is what I believe. So expiry may be somewhere close to 47,000. I don't believe it will cross 47,000 on the higher side.
Good morning, Brijesh. Now, I'll drive your attention to TCS, and Tata Sons has been in the news that they are offering to sell off 2.34 crore shares of TCS, which will dilute their equity by 0.65%. They hold over 72% of equity in TCS. The shares will be sold at a floor price of 4,001. TCS stock yesterday closed at around 4,114. Right now it is at 4,047. But looking at the returns TCS given over the last 1 month or the last 5 days or even today, it's all been in the negative. Do you see investors' sentiment going negative because of this news, because of the price is lower, almost 3.6% lower than the current price it was yesterday?
Yes, I do believe there is a sentimental damage in TCS. So 4,000 is the mark where the TCS has seen a multiple demand zone. And I sense that looking at the chart pattern, it looks like that 4,000 mark will be broken. And nothing much of a downside. 3,800 to 3,900 is again the demand zone. So I believe whenever it comes close to 3,800 mark, 50 points plus and minus, I think long-term investors can re-enter their long positions. Maybe from the immediate point of view, it looks slightly bearish, maybe because of the news. And today there is a gap down opening. So basically, whenever there is a gap down, there is a follow-through selling do come. Maybe tomorrow there can be some breather, but then eventually there can be a little bit further selling in the TCS particularly. TCS might come somewhere close to 3,800, but I believe this level should be viewed as a buying opportunity. Long-term perspectives remain quite a positive. Our fundamental analysts believe that this news will not impact the long-term story, and it is just a this is just to avoid the IPO thing what they are doing. So I think slightly little bit more pressure to 3800. One should re-enter the long positions.
All right, that's the view on TCS. Another stock we wanted to pick your brains on is Shree Cement. I mean, it has been struggling for some time now. The stock has corrected by about 20% from its 52-week high. And, Brijesh, till yesterday, the stock was in this downward sloping channel. I mean, this latest up move, first of all, began on Thursday. I mean, Citi also gave a buy call on the stock. But yesterday, I mean, we saw very good volume, volumes in the cash segment. And then, of course, there was this breakout that I just mentioned earlier from that downward sloping pattern. Is that a stock to look at? Is that, looking attractive, Shree Cements?
Shree Cement has been correcting largely from the month of from the start of the Feb. I think Shree Cement is correcting, and now
You're
only
right.
because the stock has corrected so much, it has come to the oversold zone, and it's just seeing a bounce as of now. I would take a long position only when the directional long position only when the 200-day moving average is taken out, and the value for the 200-day moving average is 25,900 mark. So this pullback can move toward 25,900 mark, but only a sustainable move. We need to check fundamentally whether is a value buy or not. But technically, if I need to take an entry, it would be only a buy about 26,000 level. So right now we can see a move which is another 1,000 points from this level. This can be a trading opportunity, but confirmation for the positional bet should be done only when it crosses 26,000 on the weekly closing basis.
Trading opportunity at across 46,000. But Brijesh, what are your picks for our investors today?
Yeah, so I believe there I've selected the mid cap space. Basically, Sula Wynad is something which is looking positive. I think irrespective of the market, this would be a stock specific move. One can go long at the current price with a stop loss of 506 for the target of 620. So this is again the positional bet 15% kind of a reward is what I'm looking at. It will take a good amount of time. 15-20 days should be the time frame for this particular call. Same with the Ganesh housing. Current price one can take the buy idea with the stop loss of 673 for the target of 810. So again, this is a positional bet. And in the last couple of days, like eventually the Tata Motors after the news, the Tata Motor was correcting, and I think the Tata Motors have come to the demand zone. So there is a trading opportunity, trading bet for the next 3-4 days in Tata Motors. We can go long at current price, the stop loss of 958. I think Tata Motors will go back to 1020-25 level. So there is a trading opportunity in Tata Motors.
All right, Ganesh Housing, Tata Motors and Sula Vineyards are on the radar of Mr. Brijesh Ayal. Sir, always a pleasure speaking with you. Thank you for joining us here on News9.
Thank you.
But with that, let's slip into a short break. On the other side, Mohit Gang, co-founder and CEO of Moneyfront, joins us.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Or have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Stick here on News9. And I mean, the markets, they were around that 21,900 zone. We have been talking about it, that is going to be a crucial support for the Nifty in the short term, and we have broken below it. We have broken below both the 50-day moving average and 21,900, where we had taken support in the past 4 sessions, and Nifty continues to fall. It is below 21,900, currently very close to its day's low, down about 0.8% as of 10 a.m. this morning at 21,884 mark. Sensex is also trading with a cut of 0.63% at 72,288. The mid cap and the small cap indices, they were seeing some bit of a recovery after that opening in the red in the morning, but they have reversed course once again. We are seeing incremental selling coming in both mid caps and the small caps. Mid cap index is actually the worst segment of the market currently. It's down about 0.83% at 46,116, and the small cap index, it's down 0.45% at 14,696 mark. Volatility, remember we ended below 14 yesterday on India VIX. We are back above it. India VIX is up 2.4% as we speak, and it looks like a broad based sort of a sell off, because most sectors are trading with cuts. Apart from Nifty Metal, it's trading flat, but apart from that, most sectors are trading with a cut. Nifty Bank is down about 0.3%. Pharma stocks are down 1.2%. The IT stocks, they are the worst performing segment of the market. They are down by about 1.7% this morning, and of course there is a lot of cautiousness in the system, because remember FOMC, several central banks first of all will come out with their monetary policy decision. Of course we talk about US because it's one of the biggest ones, and it has direct implications on emerging market flows. And I think as far as the policy decision goes, most of us are not expecting a rate cut, but what we will keenly eye is the commentary coming in from Mr. Jerome Powell. If there is at least any indication that there could be a hawkish pivot in the offing, that could really hit the sentiment, and I think the market is kind of pricing that in already, because remember the inflation print in the US for the month of February came in slightly hotter than expected, and that has been a key concern of the central bank. So any hawkish pivot over there could really roil the sentiment, and we are seeing some bit of a repricing of that take place in the last couple of sessions. Nifty IT, keep a watch for that. It's down about 1.73% and falling as we speak. But to share his views on markets, let's also bring on board Mr. Mohit Gang, co-founder and CEO of Moneyfront. Thank you for joining us here on News9, Mohit. And I want to begin by asking this latest development. Of course, Bank of Japan, I mean, that has ended its negative rate era. It has raised interest rates for the first time in 17 years. I wanted to understand the possible implications of it on our markets as well as other emerging markets, because one thing that comes to my mind, because yen, of course, as we know, is a essential carry currency, so a stronger yen, a higher rate could impact some FII flows into our markets. But what other impacts do you foresee from this development, sir?
Hi Suyesh, morning, always a pleasure to be on your show. Look, I think it's a massive move by Bank of Japan. To an extent, it was anticipated by the market that Bank of Japan will kind of revert back from the loose monetary policy which it has been following, but ending the negative interest rate regime after such a long is a big signal to the global economy. Honestly, I think as you rightly said, Japan is the mother country or country of origin from which the carry trade emerges globally. And look, the differential between the US rates and the Japanese rates will still remain fairly large. The Japanese 10-year, if I'm not wrong, should be somewhere in the range of around 0.7 odd percent. And the difference between the US and the Japanese 10-year bond is still fairly high, right? So ideally, the flow of currency or the movement of currency or the movement of carry trade should not possibly reverts by this one rate hike itself, but the signaling to the market is pretty huge out there, right? Japan continues to run an inflation which is over 2%, and which is the comfort zone as stated is around 2 odd percent. And Japan is seeing inflation after many years. So I think the economy is also pretty hot out there. It kind of reverses the flow to some extent, the amount and the extent of global money which moves out of Japan is a little difficult to estimate right now, and extent to the exposure in Indian markets is also very difficult. It's kind of unknown. Perhaps there's no data around that. But my sense is this will be massive. So even if some bit of that money flows out and moves back to Japan because of higher rates out there, or because the carry trade is kind of not working that well, because look, when you hike interest rates, the currency also appreciates to a certain level. And if the currency appreciates and the interest rate goes up, the differential decreases. I think the carry trade possibly becomes less lucrative. I'm not saying it will completely stop, because the differential, as I said, is still fairly high. But it becomes less and less lucrative, and some bit of flows can move back to Japanese market or Japanese bonds or Japanese equities, perhaps, and can result in some redemptions across the globe. But the extent is fairly difficult to um, kind of imagine right now. But my sense is this will have long-term repercussions on the global markets.
All right, will have long-term repercussions on the global markets. And keeping it with the global markets, I mean, the overall setup is looking, rather bearish. The bond yields are, moving up. The dollar index is moving up. But Brent crude, Mohit, that has, surged by about 5-6%. In the past week or so, in fact, and Brent crude, as we speak, is above $87. That's a 4-month high for Brent crude, and we are approaching that uncomfortable zone. And of course, the crude prices, of course, matters for us, because India is a net importer country. So a lot of segments, and of course it's a key raw material for several industries as well. So the input costs will go up. But are we there in that uncomfortable zone, Mohit, according to you?
Look, Suresh, I think we are already there. To be very honest, there's no point denying that, and there's no point saying that above 90 we will be uncomfortable or not. The crude oil prices have persisted above $80 for a fairly long while. Look, we can always arrive at a number saying 90 is bad, 95 is worse, and so on and so forth, but 87 is no less. Trust you me. And the signals coming from the global economy are not so good, or doesn't augur very well that the crude price is cooling off in a rush, right? Right. So Iraq is talking of reducing the output, and so the signals are not that great. My sense is the globe is just wanting to pass through this month, Suresh. Honestly, I think rate hikes from Japan, US policy meet, where again the market is expecting that Fed somehow gives a signal when the rate cut is likely to happen, which is also not looking very likely or very positive. Then the crude soaring up. So the signals are not very good globally. I think the setup is extremely tight for equities, honestly. And my sense is for next 2-3 weeks, this continues to be so. And crude doesn't look like that it is cooling off in a rush.
All right, the markets are of course feeling the heat this morning. We have broken below the key support of 21,900, and all the sectors, they are falling except one. And I'll come to you in just a bit, but I'll get the view from Amit here, because he's been tracking the space. Nifty Metal, Amit, is the only lone ranger, as we'd like to call it here on News9. It's in the green. Everyone else is in red. What's going on?
Lone Ranger still in the green, though it has been correcting from yesterday today. But after you talking about repercussions on local markets from global cues, China's industrial data pointed towards a 7% growth in the January-February quarter of financial year 2024. Nifty Metal rose almost 2.5%. The biggest gainer was Tata Steel, that jumped almost 5%. Little correction today. The steel industry now expects restrictions on imports. We are a net importer of imports. But metals as such, if you look at the stocks across, they were floundering in the negative, be it last 5 days or last 1 month. They were almost all in the positive. SAIL was up, NMDC was up, Hindalco was up, Nalco was up, so was Hindustan Copper, Welspun, Ratnamani. All of them were up yesterday. They gained because of this news. Mohit, we are a net importer of steel. So if the Chinese industry is doing well, should we not be worried, or is there some sort of Ricardian economics playing here?
Look, Amit, I think that's a very interesting point you mentioned. We ought to be worrying, to be very honest. I think if the Chinese economy or the output is growing, honestly, India continues to import steel, and China is the biggest market from which we have imported steel for last 10, 11 months data also, if you look at it. I think the net import from China is massive. So we continue to run the thread that China will pump in a huge amount of steel into Indian economy, which is a guzzler of these metals. Honestly, given the construction activity and given the rapid economic development which is taking shape. So my sense is, I think market is anticipating some kind of steel cuts, some kind of duty restrictions out there. I'm not sure whether it can come immediately or will come post elections, or how will that take shape. But I think the industry is expecting some kind of restrictions out there, which should kind of give a support level to the metal stocks out here. Perhaps I think sometimes the metal stocks also play up a rally in terms of the inventories which they run. If the inventories are significant and the prices have gone up, I think that also kind of plays up on the stocks. But my sense is this is one space which ought to be watched very closely, especially the steel part.
uh, uh, Especially steel, of course. Mohit, there's another industry that we have been talking about, and that is the electrical vehicle space. And with the new EV policy that the government has come up, a segment in the market of auto ancillaries is likely to benefit. But CIA, Automotive, Varroc, all of them jumped yesterday. But for Sona, BLC, Precision and Matherson, which are likely to benefit from Tesla coming in, those stocks did not react in the positive. What is your take in the matter in this space?
Look, I think there is no two doubts about it that the policy revamp is a very, very fine balancing act which the government has done, right? And it is more to accommodate Tesla in the Indian markets. However, I think the 3-year and the 5-year clause on localization is something which is pumping up the auto ancillary stocks in the market. Look, I'm not pretty sure as to who will be the ultimate beneficiary out here. The verdict is still out, still yet to be decided. Honestly, 30% in next 3 years and then 50% in 5 years leaves a lot of space for the companies to decide as to what component they really want to pick up in India. Though I understand that Motherson Sumi and Sona BLW are at the forefront of technological things which perhaps EVs in India are using and can be compatible with Tesla also. But you never know. Look for Tesla, perhaps those guided dashboards and those automatic what do you say, the components perhaps might be too critical for the vehicle, and they might just want to import it for some time before they can actually start some local manufacturing of it, or they can pass on to the local manufacturers in India. So it's too early to call it out whether they will be like real beneficiaries. Having said which, I still continue to assume that these two companies should benefit a lot. But again, as I said, it's too wide open right now, and I would still wait for some more clarity before we can exactly pinpoint that yes, these are the two players who will benefit the most. To my sense, I think it's still not so clear.
All right, that's the view on auto ancillaries. But Mohit, before we let you go, I know you don't like to predict short-term moves, but 21,900 has been a key support for Nifty in the short term. I mean, the last 4-5 sessions we have seen a bounce back from that, but this morning we have broken below it. Could that probably kickstart the next leg of downside from here on? And if that's the case, how much do you think we fall?
Look, Shresh, domestically, I don't see any big triggers which can actually lift the market. And globally, as we spoke in this show itself, that the setup is not looking very comfortable when it comes to crude, when it comes to the policy rates across the globe. So I think it isn't very comfortable scenario right now. Plus, obviously, there is this chatter of market heating up, the regulatory glare on the small and mid caps. As I interact with a lot of small and mid cap fund managers, because that disclosure is now fortnightly or every month, there is a chatter in the circle that they will have to kind of compromise some bit on the portfolios, right? So they will have to kind of liquidate few positions and mobilize some cash in, or move a little towards more large cap kind of holdings or something like that. So, and if that were to happen, you can continue to see some selling on the mid and small cap space for another 15 days or maybe a month or so. So my sense is for next 15 days to a month, I think we are in a wait and watch kind of a scenario. Perhaps we might not value correct so much, but yeah, I think we might just spend time around these levels a little bit more than what we anticipate.
All right. Weakness could persist. Broader markets could continue to fall for another couple of weeks. The global setup could also, continue playing that spoil sport. That's the word coming in from Mohit Gang. Sir, great insights from you as always. Thank you for joining us here on News9.
Thank you.
But before we wrap things up, let's just look at the markets, because we have broken below 21,900. But the cut has not been significant. From there on, it was being looked at as a crucial support, but we are hovering just about 20 points below it. So unless there's a major fall from here, one could still see that as an extension of that support levels. Instead of looking at a particular level, we consider that as a support zone. So still the view, I would say, is that we are near that support zone, and Sensex is also moving lower. It's testing 72,200. Mid cap and the small cap space, remember what Mohit said, another 2 weeks of pain could be there as the market continues to analyze what the stress test results had to offer us. And remember, they are going to come in after every 15 days. That's what the mandate from AMFI has been for the mutual funds focused in this space. So we could continue seeing some incremental selling over there, and volatility could be a problem, especially as we are heading into the expiry sessions. Tomorrow is Bank Nifty's weekly F&O expiry. Day after is Nifty's expiry, and next week we have the monthly F&O expiry for the March series. But that's all we have in this edition of First Stick. We'll meet you at 4 p.m. for Last Stick, but up next is World Business Report.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9, plus subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political